Welcome to the American Dream, or at least the subscription-based monthly payment version currently available. If you are watching this, you probably have a Zillow tab open, looking at a house you can't afford in a neighborhood you don't like, wondering if buying a house in 2026 is even mathematically possible. You went to school, got the degree, and stopped buying avocado toast. Yet the goalpost doesn't just keep moving, it seems strapped to a rocket ship headed for Mars. Your parents love to say you just aren't working hard enough. They tell stories about how they started real estate investing in 1985 on a part-time salary. They aren't lying, but they are omitting the most important part, the math. Today, we skip the generic budgeting advice. We are looking at the cold data of why the housing market is broken, why everyone predicting a housing market crash is wrong, and why the system is designed to keep you renting forever. Let's start with raw numbers. In 1980, the median home price was $47,000. Median income was $21,000. A house cost 2 times your annual salary. Fast forward to the 2026 housing market, the median home price is over $400,000. In some cities, it is over $1 million. But median income hasn't even tripled. The price-to-income ratio has exploded to nearly 8 times in major metros. When your dad says he paid 18% interest in the 80s, he's right, but that was 18% on a $40,000 loan. You are paying 7% on a $500,000 loan. The math is not the same. It is harder today to achieve financial freedom through homeownership than at almost any point in history. So what happened? Did we forget how to build houses? No. The first villain is asset inflation. We're taught inflation is just milk and gas prices going up, but real inflation happens in the things you actually want to own: stocks, bonds, and investment properties. When the government prints trillions, that money flows into assets. Rich people don't keep money in savings accounts earning 0%. They take that cheap, printed money and buy hard assets. They flood into real estate investing because they know cash is trash. This turned housing from a place to sleep into a financial instrument. A house is now a high-yield savings account you can live inside. It is a hedge against the melting ice cube that is the dollar. The second problem, you aren't competing with families anymore. You're competing with Wall Street. Massive private equity firms realized owning the American dream is a profitable business model. They buy single-family homes by the thousands, offering cash over asking price, turning starter homes into permanent rentals. You, with your pre-approval letter, are bidding against a hedge fund managing $10 billion. Who wins that fight? They don't want to sell to you. If they sell, they get paid once. If they rent to you, they get paid forever. They're turning the housing market into a subscription service. You will own nothing, and you will be happy, or at least quiet while paying rent. Then there are the golden handcuffs. Millions of homeowners are sitting on 3% mortgages from 2020. They will never sell. If they do, they have to buy a new place at 7% interest, doubling their payment for the same house. So nobody is selling. The market is frozen. This is why the housing market crash everyone predicts hasn't happened. The only sellers are those facing divorce, death, or relocation. Everyone else is sitting tight. This creates a scarcity crisis. Low supply meets high demand, keeping prices high even though mortgage rates skyrocketed. We printed so much money that the laws of gravity don't apply anymore. Now look at the hidden costs. Insurance premiums are skyrocketing. Property taxes are soaring. Maintenance costs doubled. Even if you scrape together a down payment, the monthly cost of owning is significantly higher than renting in most cities. This brings us to the rent versus buy debate. If you run a rent versus buy calculator right now, the math is flashing red. It makes zero financial sense to buy, yet you still panic to do it. Why? Because deep down, you know the truth. You know saving cash is a losing game. You know money in the bank loses value every year due to inflation. You're trying to buy a house to store your labor in something the government can't print more of. We turned housing into our piggy bank because our actual piggy bank, the currency, has a hole in the bottom. If a dollar bought the same amount of stuff in 20 years as it does today, you wouldn't care if your house went up in value. You would just buy a house to live in. But because our money is broken, we're forced to become real estate investors just to survive retirement. Is there hope, or is this a doom spiral? Trees don't grow to the sky, but waiting for a crash is dangerous. People have predicted a crash since 2015, and prices doubled since then. The reality is, the system is rigged to keep asset prices high. If home prices crash, the banks crash. So the government will print money and offer bailouts to keep the bubble inflated. They sacrifice the currency to save the assets. In nominal terms, house prices might never go back to normal. $1 million just isn't what it used to be. So what is the strategy? First, stop playing by old rules. The save 10% strategy is dead. You cannot outsave inflation. You must increase your income aggressively. Second, understand what you're buying. Buying a house today isn't an investment, it's a luxury purchase for control. Mathematically, renting and investing the difference in scarce assets often beats buying. But the real solution, realizing the housing crisis, is actually a money crisis. Until we fix the money, we won't fix housing. As long as they print money for free, it flows into real estate, pricing you out. We're filling a bucket with holes in it. You can't buy a house because you're paying for a scarce asset, land, with an infinite asset, fiat currency. The math never works in your favor. The wealthy figured this out. They don't hold cash. They hold scarce assets. Real estate is scarce, gold is scarce, and there are digital assets that are mathematically scarce. It starts with the classics, gold and precious metals. For 5,000 years, they've been the ultimate insurance policy against the printing press. Then there is productive land, not the suburban subscription houses, but soil that produces calories. They aren't making any more of it. Even fine art and high-end collectibles, rare items that store cultural value because their supply is physically frozen in time. But what if you still want that house? The one with the white picket fence? You don't get there by saving dollars. You get there by saving in scarcity. You build a hard asset battery until it has enough economic energy to swap for the house in one move. You stop being a buyer begging for a loan, and you become a holder of something the system actually wants. But most people never look up to see that exit because the system is designed to keep you too exhausted to do anything but sprint. You are angry because you're running on a treadmill that keeps speeding up. The currency is being debased faster than wages grow. Don't let them gaslight you. It's not the Netflix subscription, it's the system. The game has changed. To win, stop playing the 1980 version. Learn the new rules.